Have you ever had a money or career question you really wanted to ask, but didn't know who to go to or just felt uncomfortable even bringing it up? You're not alone. Talking about money can feel intimidating, even scary. And that's exactly what I'm trying to change. That's why I created a free virtual coffee chat, a casual, no pressure 20-minute conversation where you can bring one thing you're wrestling with and we'll talk it through. No judgment, no jargon, no sales pitch, just clarity, ease, and a real answer from someone who gets it. If you've got something on your mind, don't sit in the confusion. Book a spot at limitfreelife.com and let's sip and sort it out. Hey there, and welcome to Money and You. I'm Michelle Perkins, your host. My search for more fulfilling work led me to career and business coaching, where I stumbled upon a game-changing discovery. Money issues often start with our mindset and habits. You see, our relationship with money is the key to overcoming those frustrating financial obstacles. As an entrepreneur, coach, and problem solver, I'm passionate about helping you create a great relationship with money. Because, turns out, that's the foundation for a limit-free life. Each week on Money and You, I speak with amazing guests about all things money, mindset, practical tips, and everything in between. We're here to give you new insights, education, and empowerment so money can be one of your favorite relationships. So join us for some lively conversations and let's transform your financial life together. Hello, and welcome to the Money and You Show. I'm Michelle Perkins, your host, and super excited about today's show. Today's topic I have a wonderful guest speaking to us from Germany, which is very exciting, and also very late for him. But we're going to talk about investing, and I know people have perpetual questions about that. And the guest today has a wonderful capacity for simplifying complex financial ideas in the investment world. So if you're not a seasoned investor, you should definitely stick around for this show because you will learn a lot, and hopefully he will clear some of the confusion you may have had if you've been maybe avoiding starting or avoiding just making kind of new choices in that realm. So without any further ado, I'm going to introduce you to Robert Rolih, an international best-selling author, investing expert, and globally recognized keynote speaker. Robert is best known for his book, The $1 Million Decision, where he pulls back the curtain on the financial industry and shows people how to build wealth safely and intelligently. After personally losing most of his money by trusting financial advisors early in his career, he made it his mission to expose the hidden pitfalls of investing and help others avoid the same mistakes. He's trained thousands of investors across more than 70 countries, appearing on major platforms like Bloomberg, Yahoo Finance, and CNBC, and is known for simplifying complex financial strategies into practical, real-world advice. Today, Robert helps business owners and everyday investors outperform traditional Wall Street strategies without taking unnecessary risks. Robert, hello. Welcome.
Hi. Maybe just to clarify, I'm currently in Germany, but I come from Slovenia. This is just a tiny country near Italy and Austria. So I was born there. I still live there with my family. It's a beautiful place, very safe and beautiful country. But I do business all around the world, and I have members from 73 countries. So yeah, thank you for inviting me.
Wow. Okay, no, thank you for being here. Thank you for clarifying that. And very interesting when people, we usually have Americans talking about investing. So I think I'm hoping we get a little bit of a different perspective, a different way of explaining things. It should be a really great show and really interesting. So I was recently reading something, and it was by a woman who I'm fascinated with. Anyway, she's more of a manifestation expert than anything, and she was writing back in the 30s, 40s when women weren't really writing on this topic. It was back in the days of Think and Grow Rich and all of this, and so I found it very interesting. And one of the things that came up was allowing just your mind to go where it goes when you meet somebody, and just to ask them, so what are you interested in, as kind of an opening. And I thought I want to use that on my podcast from now on with everybody. So what are you interested in?
Yeah, apart from investing, of course, I'm interested also in business. I started my career as a business owner. I was not in finance. I was not into investing. I started my first business in a student dorm, and my first business was a web design business. So I was basically selling websites. I created websites for small business owners. And then my second business was training business. So I was doing a lot of public speaking, especially on the topics of selling, marketing, negotiating, leadership, and stuff like this, because I was very good at in my business, and I was very profitable, and a lot of people wanted to learn this stuff from me. So yeah, that was my start of my career, and only later I ended up in the financial world, and that also helped me to be able to simplify these things, because, as you know, Wall Street and all these financial experts, they are very good at complicating things. they talk in very strange words. They are using very strange words. Sometimes you just simply cannot understand them. And I'm here to simplify things. I'm here to tell it like it is, and also uncover all these mysteries, and also the traps that the Wall Street is setting up for us, because a lot of people fall into these traps, and they lose a lot of money, like I did early in my investing career.
Do you want to elaborate a little on what happened? Thank you for that answer.
Yeah, it was a very interesting story. I started to make a lot of money as a business owner, and at that time I was totally financially illiterate. I didn't have a clue about personal finance and investing, and that is why. But I knew that at that time I knew that I should invest a part of the money that I'm making, but I didn't know how. So I trusted financial advisors and bankers and money managers. And year after year, I gave them all my business profits. And I thought that they are taking good care of my money. And after years and years and years of doing that, I had a conversation with my wife, Sarah, and she said, Robert, I know that these guys, that you trust these guys, but I don't know, maybe let's just check what is the status of all these investments. So I ordered all these reports, and the envelopes arrived, and it was like, what? Are there some zeros missing? Money that I worked hard to earn was mostly gone. And that was the start of the darkest period of my life. I became depressed. I lost my motivation to work, and it was really a very hard time for me. So that was the beginning of my financial journey, because I was lucky then. I was lucky that I also worked with Brian Tracy. I don't know if you know Brian Tracy.
Of course, I have his book across from me in my bookshelf.
Perfect. So we invited Brian Tracy. Before that, we invited him 2 times to my country as a public speaker. We organized a couple of seminars with him, and I was lucky that I also had a third event with him at that time. And after that event, I asked him for dinner. And at that dinner, I spilled out all my financial problems and what happened to me and so on. And at that time, Brian looked me straight in the eyes, and he said something that totally changed my life. Robert, it doesn't matter how much you earn. All that matters is if you have the skills to manage your money and to invest it. And at that moment, I realized I don't have these skills. I blindly trust the financial industry. So I made perhaps the most important decision of my life. I will become one of the most financially literate people in this world, no matter what. So that was the start of my journey, how to become financially literate. I started to read books, I started to attend different events, I talked with a lot of financial industry insiders, so basically I was building my financial muscles, that was the start of my journey.
Wow, there's a lot to unpack from what you just said. One of the things that really jumped out at me was you sharing all that financial information with Brian Tracy.
Yeah.
I think that's very challenging for people to do. It's hard to just, share all this.
Yeah, I was desperate.
It makes you vulnerable and everything else.
At that time. Yeah, at that time I didn't see a way out. Yeah.
No, I understand, but you bring up a good point. Was a lot of times we sort of suffer in silence with our money, and people could give us, the words we need to hear or whatever, but we feel somehow with money and finance, we feel like we need to somehow do it on our own or hire it out. But that's it's unlike other aspects of life where we just go and ask people, what should I do here? So yeah. And, I think it also speaks to the fact that you can teach yourself a lot about the financial world if you set your mind to it.
Yeah, it took me quite a while to learn all this stuff. But later, when I started to become very good at investing, at first I only invested for myself, I was using this knowledge to invest on my own, to build my portfolio, to swap, different financial products. I sold some of them and I bought new ones and so on that have much lower commissions and fees. And then I realized that when I talked with the different business owners and busy professionals, I realized that most people have the same problems that I had early in my career. They are losing money without even knowing it. They are trusting their financial advisors and they don't even know that these people are maybe not on their side, and that was the start. At that time I said to myself, okay, I need to do something. So that was the start when I started to create my online programs. I was starting to write my book and so on.
Mm-hmm. Wow. That's fantastic. And what did happen? Did you address the issue with them? Like, were they stealing your money, or were they just doing a bad job of investing it? Yeah,
there were two sets of problems. The first problem was fees. I was paying I was basically spending a lot of money paying their fees, and I didn't understand that small annual fees can have a huge effect on your long-term results. So our brains are not created to understand the long-term effect of small fees that compound every year, and we are just not built like this. This is very complex math behind it, and this was the first set of problems. So I was paying huge annual fees, and these fees destroyed my returns. And the second problem was that some products that they were investing my money in were really terrible products. Like they also used some short-term trading, some forex trading and stuff like that, and all that money basically went to zero. So this was like short-term trading, and that is why now I am, of course, a very big advocate of not doing any short-term trading, because only the financial industry, only brokers, only trading platforms are making money from your short-term trading. Of course, 95 or even more, 95% or even more of people who go into short-term trading, they lose money. So it's a game that you cannot win. It's only for professionals. Yeah.
Wow, interesting. When you talk about, overspending on fees, what is there a line there? Like, what is overspending and what is reasonable for people?
Yeah, that's a very good question. If you are paying, for example, 1% to your financial advisor or to your mutual fund. This is the management fee that they are charging. Either your financial advisor or funds that you are investing in or whatever, this is a very high fee. So as a rule of thumb, you should stick to products that have annual fees or management fees that are lower than 0.2% annually. Okay,
wow.
So lower than 0.2%. For example, the best product out there that meets this criteria are ETFs. These are exchange traded funds. This means that you are buying a big basket of stocks. Okay, a big basket of stocks. It's very diversified. You are buying companies from all sorts of industries, and this is a very, very good product, and I used to invest in mutual funds. This is a similar product, but it's actively managed, and it has very high fees. And when I realized these things about fees and the effect of small commissions and fees on your long-term returns, I immediately sold all my mutual funds and I started to invest in ETFs, in low-cost ETFs. So this is something that can really change somebody's life. If you stick to low-cost options, it's basically the same product, but you are paying very, very low fees. And this means that you get the lion's share of all the profits, of all the future profits. And that's the most important thing.
Very interesting. I didn't actually realize the difference in the fees between the mutual funds and the
yeah, they are
ETFs.
huge. It's a huge difference, and it can really. So in my book, The $1 Million Decision, what is the $1 Million Decision? It's exactly that, that even an everyday investor, somebody investing just, I don't know, 5,000 or 10,000 annually, over the course of his or her investing career, this person can lose more than $1 million just because of these fees.
Wow.
If you are paying like 1 or 2% annual fee, and that's a huge amount of money. It can really change your life if you just switch to low cost products.
Yeah, you hear a lot about go with the low cost fees, and I think sometimes that can be very confusing because sometimes people don't realize it's the product. They think it's who you're investing with as a broker or something. So
yeah, it's not the broker. If you are using any big reliable broker like Interactive Brokers or Ameritrade or whatever, Charles Schwab, the broker is very, very inexpensive. In most cases, your investment account is basically free. The fees come from the products, so if you are, for example, buying mutual funds, you are paying maybe, I don't know, 1% annual fee or 2% annual fee, or I don't know, in this range. But if you are using or if you are investing your money into ETFs, then of course the fees can be 0.05 or 0.1%, and that's okay. That's a perfectly fine fee. That doesn't this kind of fee doesn't take away most of your future returns. And of course, if you are using products that have 1 or 2% annual fees, these products can really wreak havoc in your investing accounts, over the long run.
Right. And how does the average investor find out what their fees are that they're paying, especially if somebody else is managing things and they have a diverse portfolio and you want to sort of look product by product and see what you're doing?
Today we are very lucky that we have ChatGPT, we have Gemini, we have all these AI tools. So you can basically just ask ChatGPT or Gemini. You can just say, I have this and this and these funds in my portfolio. Can you tell me what are the annual fees that I'm paying, or what are the management fees that I'm paying? And all these AI tools will find this information for you. And if these fees are, like I said, if they are above 0.2% annually, maybe it's time to do something.
Yeah. Wow. It's very interesting. So, when you wrote the $1 million decision, when was that you wrote it?
Oh, it was almost 10 years ago. It was in 2017.
Okay, so that's what I thought. Um, and you may not have incorporated the new knowledge that you may have around AI into the book.
Yeah,
So,
I
what would
didn't.
you
At
add
that
to
time,
it
there was no
now?
AI.
Yeah. So, if you were going to write it again today, would you add in some usage of AI?
Yeah, sure. I would of course add some guidelines on how to use all these AI tools to find information that is important regarding your investments. But you don't need a lot of skills to do that. Like I said, you can solve the problem in 1 minute. You can just ask what I told you a minute ago. So it's pretty simple.
Yeah.
Maybe we don't even need to update the book. We just need to add one sentence.
And so AI is good for researching and, kind of
Yeah.
just learning more. How is it in terms of asking AI, what should I invest in?
Uh, It's pretty good. It's pretty good. If you will ask AI what should be your portfolio like, if you are, let's say, you can say I am this and this age, I'm this and this age, and I have this and this time horizon for investments. What should my ideal portfolio look like? And surprisingly, AI will tell you pretty much the same things that I'm telling you. AI is very good because it has all the knowledge from all the forums, all these articles, YouTube videos, and everything. This knowledge is pretty much easily accessible, and AI will tell you basically the same things that I'm telling you.
Very interesting. Yeah, because a lot of times we can't fully trust it. I've asked it some things.
Yeah,
Not even
you should
I was
always be
asking it
careful a bit.
actually.
Yeah,
Yeah, you do have to check things.
yeah, sure.
It sent me down a bit of a rabbit hole on something that I was looking at, and then when I spoke to an actual person, she said, "Oh yeah, well that changed," and so you don't want to take it necessarily at face value, but
But
that's interesting.
it can take you in the right direction. It can give you the basic knowledge, and then from then on, also if you are working with a financial advisor, you can also ask him the right questions with the help of AI. So, for example, what are your annual fees and stuff like that.
Yeah, that is brilliant too, because a lot of people don't even have a financial advisor because they say they're just so uncomfortable with what they don't know.
I can give you one
Go ahead.
great example. Just
Okay.
today, I received an email from one of my members, and he said, Robert, I just joined your program, and can you please check my portfolio that my financial advisor created for me like 5 or 6 years ago. And I said, okay, send me the portfolio. And this guy sends me the PDF, and there are a lot of different funds on the list in his portfolio. And when I checked everything out, it was like 7 funds that were basically the same, that they were covering the same stocks, but this financial advisor put, instead of one product, he basically, let's say, sold this client 7 different products that are covering the same basket of stocks. It's it's crazy. And then I asked the member, why is that, and he said, I don't know. My financial advisor just did that, and I have a sense that maybe because of the fees, because he was able to charge more fees if he has more products in the portfolio. But basically, it was crazy because with one product, with one ETF, he could cover all that without duplicating everything through 7 different funds, So it sometimes you also need to check what your financial advisor is doing, and AI is very good at that also. You can simply give it your portfolio and ask her, is my portfolio okay? Are there some ways to optimize it, and so on? And most of the time, AI tools will give you a very good assessment.
Really interesting. Yeah, that's great. I know we can give it a lot of things. A friend of mine also sort of fed it her tax return after I think she used TurboTax or something, and it came back with a couple of really smart, questions that resulted in her saving money. So,
but sometimes, a couple of days ago, I had a situation where I gave different AI tools free price lists from three different providers for a service that I'm using, and these tools didn't do a good job because everything was in tables, and they messed up a lot of things. So they didn't give me the right assessment, and all these AI tools told me, this is something that you will pay. And then I checked, in this price list, and it was not correct. They were basically looking at the wrong cells in these tables. So sometimes you need to double check things.
I think all the time, actually, especially when it comes to money. I mean, maybe not, other things, but yeah. Well, okay, so super interesting, and I want to get back to some of the fundamentals that you help people understand. Like, what is it that people, they misunderstand fees. What else are they misunderstanding or maybe they're confused by that you help kind of break down for people?
Yeah, sometimes the problem is that people are very drawn to the next big shiny object. Recently it was gold and silver, and everybody wanted to buy gold and silver. Then it crashed, silver crashed 40% in a couple of days, and nobody wanted to buy silver. So people don't think, they just go with the herd. They see that everybody is talking about a certain investment. This can be AI, this can be quantum computing, this can be silver, this can be Bitcoin. And when everybody is talking about a certain investment, usually it's already too late because everybody already bought. And then of course the price goes down. The same story with Bitcoin a while ago when it was at 120,000, and then of course it dropped sharply. The same thing with gold and silver. The same thing with quantum computing. People sometimes we have this herd instinct, and it's very hard to go against the herd instinct. But you need to learn how to do it, because otherwise you will make a lot of very bad decisions in the investing world, and your returns will be pretty low.
Yeah, it's a great point, and it really speaks to what I love to talk about, which is your relationship with money. And as you're saying this, I was thinking, well, why do people like this sort of herd, mentality? Because it feels safer, I think, is all it is.
Yeah, so it's just human psychology.
Yeah, and there's not a lot of strategy there if you really break it down. It's just like, this feels safe. This feels like I want to, be part of it as well, because everybody else is going to be, and I don't want to be left behind. It's all kinds of emotional things that really are not contributing to making a smart decision. And it's really important, I think, to recognize when that's happening. Like, oh my gosh, I've got to chase the crowd and be part of it is not really a strategy. It's a feeling. It might be a good idea.
Yeah, of course. Also, when nobody is talking, or maybe everybody is warning you about something, For example, I can still vividly remember in November 2022, Bitcoin went from I think it was 76,000 in 2021. It went down to 16,000. It was like almost 80% drop. And everybody was talking, Bitcoin is going to zero, get out of, Jim Cramer, a famous TV host, was saying, get out of Bitcoin while you can, and so on. And at that time, when everybody hated Bitcoin, I was buying it, and I was telling my members, I'm buying Bitcoin now, because, and I posted a screenshot of Jim Cramer at that time. It was so funny. And that was the bottom. That was the very bottom of the previous previous bear market in Bitcoin. Later, Bitcoin went to 120,000. So 16,000 was a very good entry point. And I made a lot of money with that call.
Well, a follow-up question to that: do you still have it, or did you make?
No. We sold it. We sold Bitcoin 20% when it was 120,000, then 40% when it was 106,000, and the last 40% we sold when it was 96,000. So we were out of crypto already in November 2025. Yeah.
Yeah, I love that. I love that you explained it that way, because what was the thinking there? I feel like that's the piece that people understand, buy it when it's low, and if they're brave enough, they do. But then they don't necessarily know, well, do I hang on to this forever because it could go to 1 million? What do you do then?
Yeah, so there is a very important distinction here because different investments have different logic. For example, ETFs, stock ETFs, when you are buying big baskets of stocks, I'm never selling them. I'm just buying, and never selling them. Because the stock market will very likely be much higher in 10 or 20 year time compared to now, because companies are producing new value. Companies are innovating. This is basically value creation, and they are more and more profitable and so on. So this is investing in real value. But Bitcoin is just a store of value, just like gold. Okay, it's a digital store of value. You of course need to understand what are you investing into. So Bitcoin is a store of value for new generation, basically digital gold, improved digital gold. But right now it's behaving like a teenager. It's going up and down very, very quickly. It's not digital gold yet, but it's on the way to become that, maybe in 10 to 20 year time. But right now it's very volatile. So with Bitcoin, because it has these big cycles, 4-year cycles, it's very smart to buy when everybody is hating it, and of course then selling Bitcoin when the price goes up sharply. So my reasoning was basically that Bitcoin already did a huge move. We were sitting on huge profits, and I said, why not cash out? I'm not prepared to stick with Bitcoin for additional couple of years and go through the bear market where the price can fall 70-80%. But of course. Now I'm preparing for new opportunities, because Bitcoin, it's very likely that over the course of the next, 6 to 9 months, Bitcoin can form a new bottom, and I'm preparing to start investing in Bitcoin again. It's. But like I said, it's a totally different asset class compared to stocks. With stocks, I'm just buying, and I will, of course, cash out when and if I'm retiring in, 170 years. If they don't upload me to the cloud.
What do you think? So
Okay,
there's
just kidding.
ETFs, which we can understand from your description, but there's other stock investments. I mean, do you buy individual stocks as well? How do you do any of that? Or
For most people, it's best to stick to ETFs because with
okay,
ETFs you are buying basically the whole market, and you don't care which stock will go up and down and so on. You know, it's simple, it's easy, it's low cost. That's it, perfect. So
okay,
most of my stock portfolio is of course in ETFs. But then, because I'm a bit more sophisticated investor, I'm
yeah,
not, just kidding. I'm adding some individual stocks that are tied to disruptive innovation, so disruptive technologies. Because these stocks are usually not represented well in ETFs. But if you are doing that, you should build a basket of these stocks with a smaller part of your portfolio. Okay, so this
yeah,
is super important. You should
yeah.
always have a good risk management. You should never invest just in one or two individual stocks. So my portfolio is built mostly from ETFs, and then I have a basket of additional 15 to 20 individual stocks that I handpicked and are, I believe that they have great potential for the future. But like I said, this is just because I'm into this. This is something that I like, and I am,
Mhm.
of course, investing a smaller part of my portfolio into individual stocks. And like I said, not in just one or two, but in a basket of 15 to 20 individual stocks.
Okay, all right, wonderful. And any other investments that we haven't talked about that you think are key?
Yes, of course. You should always have some gold for safety, but just for
Yeah.
safety. And this should never be more than 10% of your portfolio, I think. So this is my guideline. Because gold went up so much in the recent years, I also cashed out from
Mhm.
gold a bit because if you if you have 150% return in a couple of years,
Yeah.
it's okay if you cash out a bit. Then of course you can also buy Bitcoin from time to time. Right now I'm not exposed to Bitcoin. Because I'm waiting for new opportunities, but very likely in 1 year time, I will very likely have some Bitcoin in my portfolio. Of course,
Okay.
this will not be 80% of my portfolio. That would be too risky. But I don't know, maybe 5, 10, 15%. Yeah,
Okay.
you can go with it. If you know what you're doing. So
Hmm.
these are the basic building blocks. Of course, you can also dive into bonds. But I am too young for that. Bonds, yeah. If your time horizon is at least 10 years or more, then I don't see a very good reason to invest in bonds, because bonds have never outperformed stocks over this kind of time period if you are investing for 10 years or more. So I don't believe that there is a high likelihood that bonds will outperform stocks if you are investing for at least 10-year time. So yeah, maybe later when I will approach my, let's say, retirement, even though I never
Yeah.
intend to retire.
I feel the
Let's hope.
same. Yeah.
Yeah, but maybe later I will find a reason to invest in bonds, but right now, no, not yet.
Yeah. Well, I love that you have sort of an international view of everything because you're working with people in 70 countries. What makes the difference? Is there any difference in what you would tell someone in the US versus someone in Germany, for example? Like, is there a difference, or is everybody doing the same thing the same way?
Not really. There are basically no differences. The only difference is the taxes in different countries. So, for example, in some countries, Bitcoin is taxed differently compared to ETFs. But these are minor details, and you just need to do a little research. What are the taxes in your country like for different asset categories, and maybe do some minor adjustments regarding that. But otherwise, the same strategy can be applied all around the world.
Yeah. Okay. And, it is an unusual time right now. We have a lot of geopolitical things happening, and things are shifting around, and
it's crazy.
Alliances are shifting. All kinds of things are really happening quickly. From an investment standpoint, is any of this impacting your thinking around companies or ways of doing things or anything?
No, because you can always find 100 reasons why you should go out of the market, why you should be in cash or whatever. There will always be wars. There will always be recession risks. There will always be different problems in the world, pandemics and stuff like this. So. You can always find the reasons why you should sell, but this is usually the wrong decision, because sticking and investing also when the times are tough, this is one of the most important things when it comes to long-term investing and getting great returns when long-term investing. So if the market falls a bit, or for example, let me give you a great example. April 2025, Liberation Day, Trump tariffs, it was crazy. Everybody was talking about recession and the end of the world and US dollar losing its purchasing power and status and so on. What we did back then, we were buying. I was basically telling my members 3 times during March and April, I'm buying. And that was an amazing opportunity to buy while everybody was scared. The fear and greed index went down to 3. That was unheard of.
Wow.
This meant extreme fear. And whenever I see extreme fear in the market, I'm buying.
Wow. Where do you find that index?
This is a very well-known index. You can just put into Google Fear and Greed Index, and it will take you to the CNN website. So this is on CNN website. Okay? It's CNN, and just Fear and Greed Index, put it into Google, and it will find it.
So interesting. So very interesting. Okay, I love this. I want you to be able to tell people about, more about your book, more about your program, but any advice or tips or things that are something that you think is really important for people to walk away with that we haven't discussed. I'd love for you to share that.
Yeah, maybe just one quote from my book. Love risk when making money, hate risk when investing money. It's so powerful. When it comes to making money, you should be aggressive. You should take risks. You should learn stuff, and so on. You need to be very active. But when it comes to investing your money, you should be very careful. You should avoid making too many decisions. You should avoid listening to 100 experts and media and so on, because this is just noise. Okay, so like I said, love risk when making money, hate risk when investing money. And if you just do that,
I love that.
Amazing financial life.
That's great, and I can see the business side of you on the making money part, and what you probably the risks you took to make that business initially really work, and then the flip side to that. That's great. Thank you. Yeah. So tell us about how people can get your book, how they can join any programs that you have or contact you.
So yeah, my best advice at the end would be to go to my website. So it's robertrolih.com. So my name and last name.com, and I'm running a special online masterclass. It's a 90-minute masterclass for long-term investors that is totally free of charge. So it's a free masterclass where I teach all about long-term investing, how to invest in the age of artificial intelligence and excessive money printing. It's an amazing masterclass that has, that will provide a huge value for you if you are investing or thinking about investing in the future.
Wow, great. And is that a free masterclass or is it paid?
It's totally free. It's totally free.
Okay. Okay, well, I'll put the link to that in the show notes. Do you, I'll get that from you. Or did you say the link? Or it's on your website?
It's on my website. So you just go to robertrolih.com, my name and last name.com, and it will be there. Just scroll a bit and it will be there.
Okay. And you can find $1 Million Decision anywhere you find books?
Yeah, it's on Amazon. It's on Amazon, yeah.
Okay.
Yeah.
Okay. Yeah. All right. Well, Robert, this has been great. I can see your knack for making this information simple and understandable, and kind of love the way you explained everything. So I'd really advise people to read your book, which I'm sure just elaborates on all of that, and and to watch your masterclass. I'm going to. So that's great. Thank you so much for that, and thank you so much for being here.
Thank you for inviting me.
Yeah, no, I really enjoyed it, and I'm sure the audience got a lot out of everything you had to say. So thank you so much. And audience, once again, thank you so much for joining us on the Money and You show, the Money and You podcast. You can find us on the Limit Free Life YouTube channel, as well as anywhere podcasts are found out there. And if you like the show, please share it, and also please rate and review the show. If you got something out of it, we can always use those reviews. We can always use those ratings to help us bring more wonderful guests like Robert to the show. So thank you so much, and we'll see you next week.